Hello students, in present video I am going to explain about fourth problem from final accounts topic. I am taking this question from Telangana State Telugu Academy Inter First Year Accountancy Textbook. But this video is useful to all commerce students who want to know about final accounts topic. First three problems videos links are available in the description box. Let us start the problem. From the following trial balance of Messrs. Manoj and Sons Traders, prepare trading account, profit and loss account and balance sheet for the year ended 31st March 2018. So trial balance is given in the question. Along with the trial balance, he is giving some adjustments also. Trial balance date is 31st March 2018. So trial balance will be prepared at the end of every year. So year last date is 31st March 18. By using this trial balance and additional information, we have to prepare trading account, profit and loss account and balance sheet. So these three come under final accounts. Here Manoj and Sons Traders. This is one sole proprietorship business. Assume that you are an accountant of this organization. So for this organization we have to prepare final accounts. Final accounts are prepared at the end of every year. So final accounts date is also same, 31st March 2018. If this is the last date of the current year, starting date is 1st April 2017. So current year is 2017 and 18. First we have to prepare trading account and profit and loss account. These two we prepare in one table. These two are accounts. Accounts are of three types: personal accounts, real accounts and nominal accounts. Trading account, profit and loss account. We prepare these two accounts to know the profitability. So to know the profit or loss in this business. So to know the profit or loss, we have to consider expenses, losses, incomes and gains. So these are four we are going to show in these accounts. These four come under nominal accounts now. Therefore, trading account, profit and loss account. These two are nominal accounts. So while preparing these accounts, nominal accounts rules we should follow. Nominal account rule: debit all expenses and losses, credit all incomes and gains. So expenses and losses we have to show on debit side, incomes and gains on credit side. For trading account, for profit and loss account, same rule we should follow. Then the doubt is which expenses and losses we have to show in trading account, which in P&L account. Expenses are of two types: direct expenses, indirect expenses. Direct expenses we have to show on debit side of trading account. Indirect expenses on debit side of profit and loss account. So the expenses which are incurred up to manufacturing process are known as direct expenses. So the expenses which are incurred after manufacturing are known as indirect expenses. Similarly, credit side we have to show incomes now. Incomes also two types: direct incomes, indirect incomes. Direct income means main income. For any organization, sale is main income. So direct incomes in trading account on credit side you have to show. Indirect incomes like commission received, interest received, dividend received, discount received. So all these incomes are indirect in nature and we have to show them on credit side of profit and loss account. So first we start with the trading account. Once you see the heading, trading account, comma, profit and loss account of Messrs. Manoj and Sons Traders for the year ended 31st March 2018. So trading account, P&L account, both we are going to prepare in this table. First trading account. Debit side direct expenses, credit side direct incomes. You have to start trading account with the opening stock. See the question. Debit column, opening stock 6,000 is given. So opening stock means closing stock of previous year becomes opening stock for current year. So the unsold stock of previous year is known as opening stock for current year. Year starting date is 1/4/2017. No? The stock on that day is known as opening stock. Debit side you have to show that amount. To opening stock 6,000 rupees. Next you have to write purchases. Amount in inner column or in outer column. For that you have to observe whether any purchase returns are given or not. In trial balance In credit column he gives. Purchase returns are not given. Therefore, purchases 20,000 in outer column. Next, see the debit. Purchases, salaries, wages. Wages we pay to workers who work in factory, who manufacture goods. So wage is direct expenditure because manufacturing related expenditure. We have to show that on debit side of trading account. Wages. Adjustment is given. Therefore, wages amount 7,800. Write in inner column. Adjustment number 6. Outstanding wages 1,200. Outstanding means we have to pay. We have to add. Plus outstanding 1,200 rupees. Total in outer column 9,000 rupees. Buildings. Carriage on purchases. Carriage on purchase, carriage inward. All are same. Meaning is firm purchase raw material from supplier's place to our factory. We are bringing that. For that we incur transportation expenditure. This is manufacturing related expenditure. Direct expenditure. Therefore, trading account debit side. 400 rupees. Gas, coal and water. While manufacturing the goods, we incur this expenditure. So this is direct expenditure. Trading account debit side. Amount in outer column 200 rupees. Office expenses, commission, debtors, opening stock, machinery, insurance, bank balance, bills receivable, cash, furniture. Debit column completed. Come to credit column. Sales. Sale is a direct income. Trading account credit side. Buy sales. Amount in inner column or outer column? We have to observe debit column once. If sales returns are given, show the amount in inner column. Otherwise outer column. Sales returns are not given. Therefore, sales amount 52,000. Write in outer column. Then come to adjustments. Only one amount. Closing stock. Opening stock on debit side we wrote. Closing stock on credit side we should write. Buy closing stock 9,000 rupees. So all amounts we have taken in trading account. Finally, we have to find out gross profit or gross loss. Observe which side total is more, credit side. In rough notes, credit total we have to calculate 61,000 rupees minus debit total, all these amounts total 35,600. Difference is 25,400 rupees. Credit side we wrote income. Debit side we wrote expenditure. So income is more than expenditure. Therefore difference is gross profit. We said we should show this amount where the total is less. Debit side total is less. Debit side write down gross profit. 25,400 rupees to gross profit. Two sides put the totals. Highest total 61,000 rupees. Trading account is completed. Continuation is profit and loss account. Now profit and loss account. Debit side indirect expenses and losses. Credit side indirect incomes and gains. First we have to start this account with the gross profit. In trading account, on debit side we wrote gross profit. That amount we have to bring on credit side. By gross profit 25,400 rupees. Now come to trial balance debit column. Purchases, salaries. Firm pays salaries to employees who work in office. So salary is not related with the factory. Means it is not a manufacturing expenditure. It is not direct expenditure. Office expenses are indirect in nature. Therefore, it is an indirect expenditure. Show on debit side of profit and loss account. Salaries. Adjustment is given. Therefore, amount in inner column 5,000 rupees. Adjustment number 2. Outstanding salary is 1,000 rupees. So outstanding means we have to pay. Therefore, we should add plus outstanding 1,000 rupees. Total salary for current year is 6,000 rupees. In that 5,000 we paid, 1,000 we have to pay. Next, wages completed, building, carriage on purchases, gas, coal, water, office expenses. Office expenses are indirect. Debit side. To office expenses, 600 rupees. Next, commission. In debit column he is giving. So debit column he gives expenses, losses, assets, drawings. Means it is commission paid. If it is commission received, he gives in credit column. This is an expenditure, indirect expenditure, because commission is not related with manufacturing process. So commission here 300 rupees on debit side. Next, debtors, opening stock, machinery, insurance. So firm took insurance policy, fire insurance policy, marine insurance policy, accidental insurance, etc. And to insurance company they paid premium. This premium is not related with the manufacturing process. So it is not direct expenditure, it is indirect expenditure. Profit and loss account debit side. To insurance. Adjustment is given, therefore amount in inner column. Insurance amount is 400 rupees. Adjustment number 3. Prepaid insurance 100. Prepaid means paid in advance. So next year insurance premium also now only we paid. So next year amounts we have to show in next year. Why we are preparing these accounts? To know the current year profit or loss. Therefore only current year expenses, current year incomes we should show. If next year expenditure is included in current year expenditure, we have to subtract that. Therefore, prepaid insurance we have to subtract. Prepaid 100 rupees. Current year insurance is 300 rupees only. Next, bank balance, bills receivable, cash, furniture. Debit column completed. Come to credit column. Sales, creditors, capital, interest received. This is indirect income. Credit side. Amount 2000 rupees. Bills payable, bank overdraft, outstanding rent. So new point. Outstanding expenses. Generally he gives in adjustments. So previous problems also if you recollect, he used to give outstanding rent, outstanding salary, outstanding wages, etc. information as an adjustment. So adjustment amount 2 times we should write. So one time to concern expenditure we have to add in P&L account. Second time we have to pay that expenditure. It is a liability. So in balance sheet under liability side we have to show. But here outstanding rent is given in credit column of trial balance. Suppose outstanding rent is given in the adjustment. Assume that in trial balance rent 5000 is given. In adjustments outstanding rent say 100 rupees given. What is the meaning of this? Current year total rent expenditure is 5100 rupees. In that firm paid 5000, 1000 firm has to pay. In next year they are going to pay. So to know the profit or loss of current year, all current year expenses and losses, incomes, gains we should consider in current year only. Current year rent expenditure is 5100, not 5000 rupees. So if you consider 5000 in current year, it is not correct because 100 rupee expenditure you are not showing in current year. So profit exceeds by 100 rupees. And showing this 100 in next year is also not correct because that 100 expenditure belongs to current year. Money is going in next year because firm is going to pay that 100 rupees in next year. Even though cash is going in next year, that expenditure belongs to current year, no. Therefore, in current year final accounts only we have to show that 100 rupees. So, 5000 plus 100 rupee, 5100 we have to show on debit side of P&L account. And in balance sheet liability side, outstanding rent we have to pay, no. It is a liability, therefore under liability side we have to show this 100. But in present problem, this outstanding rent is also given in the trial balance. What is the meaning of this? Meaning is, while preparing rent account, there's an outstanding rent 100 rupees also they have considered. After recording 100 rupees in rent account, the balance carried on amount in rent account is 5000 rupees. That is the meaning of this information. So when outstanding rent is given in the trial balance, we should understand that in rent account already that amount is adjusted. Already that amount is considered while preparing rent account. Therefore, while writing rent, you need not to add this outstanding rent again, because that rent amount includes this outstanding rent amount also. So adjustment is not required in profit and loss account. And in balance sheet, under liability side, we have to show this. Because 100 rupee we have to pay, no? It is a liability. Therefore, remember this point. If outstanding expenses or prepaid expenses, incomes to be received, incomes received in advance, if these adjustments are given in adjustments, then while preparing profit and loss account, while writing the main expenditure amount or income amount, we have to consider these adjustments. Means we should add or we should subtract. And in balance sheet also, we have to show these amounts under asset side or liability side. But if outstanding expenses or prepaid expenses, incomes to be received or incomes received in advance, if this information is given in trial balance, then while preparing profit and loss account, we should not consider them, because already these amounts are considered while preparing that expenditure accounts or income accounts. So directly these amounts appear in balance sheet. Here also same, outstanding rent we should not write while preparing profit and loss account. This amount we should show in balance sheet under liability side. Trial balance amounts completed. Come to adjustments. Closing stock. Adjustment amounts 2 times we should write. One time trading account credit side. Second time it goes in balance sheet, ignore. Outstanding salaries. One time we are considered here. Second time balance sheet. Prepaid insurance. One time completed, second time balance sheet. Fourth point, create 5% provision for bad debts. New point. So what is the meaning of provision for bad debts? Let us see with one example. We are running one firm. We sold goods to 3 customers. Customer A, B, C. Amount 10,000 each. Total sales amount 30,000 rupees. Suppose firm sold goods to customers for cash. Then these are cash sales. So these 3 members are customers. Total sales amount is 30,000 rupees. 30,000 cash is coming into the firm. Assume that these are credit sales. Means firm has given goods to them, but they are not paying the money immediately. Then these 3 customers become debtors. So debtor is a person who is liable to the firm. They have taken the benefit but not yet paid the return. So in firm books, debtors 30,000. To the firm, this 30,000 is an asset because money is going to come. Assume that A became insolvent. So he took loans. In his business, he got total losses. Now he is unable to repay the loans. So he went to court. He applied for insolvency. Court has taken his assets. Court sold these assets on auction basis. Court declared him as insolvent, bankruptcy. As per court order, we are going to get only 50% of this due amount. So A has to pay 10,000 rupees now. So we came to know that only 5,000 is going to come. So another 5,000 is not going to come. This is a loss. This is known as bad debt. Now can we say that we have 30,000 worth asset? No, 5,000 is not going to come. So we should subtract that. That 5,000 is known as bad debts. Debt became bad. Now the debtor amount is 25,000 rupees. 25,000 is going to come. Our asset value is 25,000 rupees. Come to customer B. We came to know that his financial position is not good. Slowly we are getting doubts on him. 10,000 he may pay, he may not pay. Chances are 50-50. Now confidently we cannot say that our debtor value is 25,000 rupees because there is a doubt. 10,000 may not come. But we cannot call this 10,000 as bad debt because he may pay this amount. So we cannot include this 10,000 rupees in debtor amount and we cannot write off this amount as bad debt. But this 10,000 we have to show in current year only because suppose we have not written anything regarding this 10,000 rupees. We wrote that our debtor value is 25,000. Say next year this amount became bad. So debtor's amount is related with the current year. So current year related losses we have to show in current year only. If you show this bad debt 10,000 rupees in next year, technically it is not correct. Not only that, suppose 10,000 we are not written in current year. So we have a doubt that 10,000 may not come. Expected loss. So that expected loss in profit and loss account you are not showing. Means you are exaggerating current year profit. That is another problem. Next, in accounts we follow generally accepted accounting principles. Accounting principles are of two. Accounting concepts, accounting conventions. There is one accounting convention, conservatism, also known as prudence. This convention says that accountant has to record all anticipated losses, but he should not record expected profits. This 10,000 is an anticipated loss, so we have to record that in the books. We are preparing the owner mentally. So don't think that total debtor value is 25,000. Don't think that 25,000 is going to come. For 10,000 there is a doubt. So we are giving this information well in advance to our owner. Therefore, this 10,000 also we have to record in current year. Then how to record this? The appropriate word is provision for bad debts, also known as reserve for bad debts. Actually speaking, there is a difference between reserve and provision. But here you need not to bother about the difference because in these two cases accounting adjustment is same. So PBD or RBD, any word we can use. Otherwise, provision for doubtful debt. Otherwise, reserve for doubtful debt. All are same. How this amount will be calculated? Sometimes firm observes individual debtor, customer. So we analyze his financial position and individually we calculate provision for bad debt amounts. We add all those amounts, then total PBD comes. Suppose this is a big firm, so many debtors are there. Individually analyzing each and every debtor's financial position is not possible. In that case, firm follows one policy. That is, every year they provide a certain percentage of provision for doubtful debt on debtors. So how to decide this percentage? Based on firm's previous experience. So generally, how much percentage of debtor may not come? How much percentage of bad debt loss we get? Firm has experience now. Firm can guess now. So that amount will be provided towards provision for bad debts every year. So this is about provision for bad debt. See the adjustment again. Fourth bit. Create 5% provision for bad debt. On debtors, 5% PBD we should provide. So we said we should write this amount. Losses are to be debited to this account now. This is expected loss. Therefore, we have to show on debit side of profit and loss account. To provision for bad debts. Amount is not given. We have to calculate that. On debtors, you have to calculate. Debtors amount is available in the trial balance now. 25,000 rupees. On that, 5%. 250 into 5. 1250 in outer column. Fifth point. Depreciation on furniture 200 and on machinery 600. Furniture, machinery. These two are fixed assets. When we use fixed assets continuously, its value decrease. It is a loss. This loss is known as depreciation. So there is no relation between manufacturing process and this depreciation loss. Therefore, in profit and loss account, we have to show this. To depreciation on first asset, furniture. Once you recollect previous problems, he used to give percentage. 10% depreciation on furniture. So furniture value into 10 by 100. But here you need not to calculate like that because depreciation amount is directly given in the adjustment. Furniture depreciation 200. Directly in outer column we have to write. Similarly, depreciation on machinery 600. You can write these two amounts in inner column also and total 800 in outer column. Both are okay. Directly write down these two amounts in outer column, otherwise total in outer column. Next, outstanding wages 1200 completed. All amounts are completed. Finally, we have to calculate the net profit or net loss. Observe which side total is more, credit side. In rough notes, these two sides totals we have to calculate. Credit total, these two amounts total 27,400. Debit amounts total 9,250. So credit side we wrote incomes, debit side we wrote expenses. Income total is more than expenditure total. Therefore, the difference is known as net profit. We said we should write this amount. Debit total is less. So debit side 18,150. For this, write down to net profit. Two sides put the totals. Highest total 27,400 rupees. Here also same. In textbook, answer is given as 20,150, which is not correct. Net profit is not 20,150. Textbook answer is wrong. Net profit is 18,150. So trading account, profit and loss account. These two are completed. Next, balance sheet. Balance sheet of Messrs. Manoj and Sons Traders as on 31st March 2018. Balance sheet is not an account. It is only a statement. Therefore, we should not write DR, CR symbols. Balance sheet contains 4 columns. Liabilities amount, assets amount. Liability side, we should not start with the TO2. Asset side, don't start with the BY by. Because balance sheet is not an account now. See the trial balance debit column. Here, asset side. Purchases, salaries, wages, buildings, asset. So, balance sheet asset side. No adjustment. Therefore, amount in outer column 24,000 rupees. Next, carriage on purchases, gas, coal, water, office expenses, commission, debtors. Debtor is an asset. Asset side. Adjustment is given. Therefore, amount in inner column. Adjustment number. Create 5% provision for bad debts. So, provision for bad debt we have to subtract from debtors in balance sheet. Because amount is not going to come. Minus provision for bad debt. We calculated the amount in P&L account now. 1250. Remaining amount in outer column. 23,750 rupees. Next, opening stock completed. Machinery, it is an asset. Depreciation adjustment is there. Therefore, machinery amount 12,000 rupees in inner column. Depreciation we have to subtract. Minus depreciation. Depreciation is directly given in the adjustments now. Fifth point. Depreciation on furniture 200 and machinery 600. 600 rupees. Remaining amount in outer column 11,400 rupees. Next. Insurance, bank balance. This is an asset. 4,000 rupees. Bills receivables, asset. 2,000 rupees. Cash, asset 1300 rupees. Furniture asset. Depreciation is given in the adjustment. Therefore, furniture value 5000 rupees in inner column. Depreciation we have to subtract 200 rupees. Remaining amount in outer column. So debit column completed. Come to trial balance credit column. Means here liability side. Sales. Creditors. Creditor is a liability. Amount 18,500 rupees. Capital, interest received, bills payable, it is a liability. 5,200 rupees. Bank overdraft, from bank we took loan, this is also liability. 5,500 rupees. Next, outstanding rent 800. So we have to pay, it is a liability. Liability side, trial balance amounts completed. Come to adjustments. Closing stock on asset side at the end. Outstanding salaries we have to pay. It is a liability. Liability side 1,000 rupees. Third point, prepaid insurance 100. Next year insurance now only we paid. So this is an asset to us because insurance company became liable to us. So without receiving the benefit from them, we paid money to them. So they are liable to us. It is an asset to us. Asset side, prepaid insurance 100 rupees. Create 5% provision. Completed. Depreciation on furniture 200 and machinery 600. Completed. Outstanding wages we have to pay. It is a liability. Liability side 1200 rupees. Finally, asset side show the closing stock 9,000 rupees. Come to liability side. Capital in inner column 30,000 rupees. In profit and loss account net profit came now. That net profit we have to add. Plus net profit 18,150. Total in outer column 48,150. Finally, find out the totals of two sides. Liability side total is 80,350. Asset side total same 80,350. In textbook, answer is given as 81,350, which is wrong. Correct answer is 80,350. Thus, in balance sheet, on two sides you should get same totals. Then only a problem is correct. So this is all about fourth problem from final accounts topic. Hope this video is helpful to you. Thank you.